How are we getting on, people? Luke here from LAGFX. We are back today with a new Sunday sessions video. If you guys are new to this series, it's basically where we choose a few pairs that we feel hold good potential and we break down some of the analysis we have performed to give you guys a better understanding on how we are looking at tackling these markets in the coming week. If you go on to enjoy this video, don't forget to leave it a thumbs up. All the support you guys provide is very much appreciated. And if you have any questions or queries with regards to the analysis I go through today, then please leave them down in the comments below. Now, there's a few pairs I'm going to go over in today's video. And the first pair we are going to start with is the euro to the US dollar. So you can see on screen, price was trading us in a bearish way, trading us down and into this demand zone here. And what we have seen since is price actually accumulate. Now, an accumulation is where supply is removed from the market and demand is introduced. And what we tend to witness is a range in market. The difference between an accumulation and a distribution is an accumulation usually happens after a down move, which then encourages an up move. A distribution is the opposite. So it's usually after an up move, it distributes, it then usually produces a down move. Here we have an accumulation because price is traded down, traded into an area of demand. That's introduced demand and supply is being offloaded. We are now seeing breaks in highs, protections in lows, which as we know, encourages the belief that price is trading us in a bullish way. So I've got a take profit target here. I want to see price trade up and into this area, clear this area of inefficiency, clear this fair value gap before a continuation in bearish structure. The reason why we want to see a continuation in bearish structure is because the higher time frame bias is a bearish market. So this here is merely a corrective wave within a higher time frame schematic, a higher time frame scheme of things, essentially. So how can we look to tackle the Euro USD this coming week? Well, I would like to see price pull back slightly into an area of demand, a fractal area of demand from this most recent impulsive wave. This will give us the ability to get involved in this market with a more refined entry. And then we can begin to look to actually trade this market long. Trading price all the way up and into this area of supply here. We will then see a distribution take place. So demand will be removed from the market, supply will be introduced. So a load of supply will be activated here. All of this demand here, here, and all the demand here will then be removed from the market because people will be taking profit. People will be wanting to close any running positions to bank profits, you know, the difference between prices. And as we know, that will cause a flip in the S&D balance. And then we can look to actually short this market longer term following the overall bias. So I'm going to set an alert here. This right here marks a hidden order block. I'd love to see price trade down and into this. As you can see, it clears all these orders here. It's clearing this order block that we have left over. This order block mitigates this one. This one mitigates this one. So it's just this that's left over. So I'm going to set an alert here for price to pull back down and into. That's going to allow us to get us that refined entry. Trade the market long, trade up and into this fair value gap, close those positions, and then prepare to go short. Heading over to the US dollar Swiss franc, this is a pair that we've traded very, very well as of recently. And I'm looking to take full advantage of it again this coming week. You can see here, we have the opposite of an accumulation. We have what looks to be a distribution. Why? Because we have bullish structure, price is then ranging, and we're starting to see a breakdown in price. So we're seeing breaks in lows and protecting highs. Now, what you'll also notice is we have a head and shoulders pattern. Now, a head and shoulders pattern is usually formed at the end of a bullish wave and the start of a bearish one. Again, it represents a distribution in price. These are just different words and different terms for the same kind of patterns and things that we see in the market, which give us that impulse to buy and sell. So realistically now, in order for me to get involved in this market, I want to see a continuation in bearish structure. We've broken these lows here, which is brilliant. So we've broken the neckline. We've cleared that liquidity and price is still driving lower, which tells us that there isn't much liquidity left here and the S&D balance is in favor of the supply. So what we can expect is for price to pull back, very similar to the Euro US dollar, but just the opposite way. Pull back to set a lower high before continuing to set lower lows. This again will allow us to get us those refined entries, and then we can take advantage of some bearish structure within this market. Now there's something else to take away from this. The euro US dollar has a quote currency of the US dollar, whereas the US dollar Swiss franc has a base currency of the US dollar. And we want to see the opposite things take place. So we want to see strength in the euro US dollar, and we want to see weakness in the US dollar Swiss franc. So that tells us that we want to see weakness in the US dollar this week. So again, what I'm going to do is I'm going to set my alerts here. This represents a hidden order block. I want to see price come and clear this inefficient structure, trade into our hidden order block, give us our fractal break of structure in and around this area here, and then we can look to take part in this market. Now, just to mention, I posted a video the other day explaining what a break of structure was, okay? And I had a comment, and someone asked me, what you're referring to as a break of structure, is that not a change of character? Now, my simple explanation to that, and what the difference between a change of character and a break of structure is, a change of character is simply a fractal break of structure. And a change of character, or the term change of character, was created to give those wanting to understand price action an easier explanation and to allow them to understand it on an easier level. But if I'm being completely honest with you, a change of character is a break of structure. We are breaking one structure and creating a new one. We are simply doing it on the lower time frames. So a change of character is a break of structure just on the lower time frames. And what I can do is I can actually create a video around it just to kind of give you a deeper explanation and a better understanding. But what we would be looking for in the eyes of Choch would be a change of character here, okay? This would be our fractal break of structure, right? And then a continuation in bearishness. This here, this entire thing here, would be a break of structure. That's my analysis for the US dollar Swiss franc. Heading over to the Great British Pound to the US dollar. As you can see here, price has recently delivered us with a higher time frame break of structure to the downside, okay? So this right here represents a higher time frame break of structure to the downside. So that tells us that enough supply was introduced from this area here to actually give us a flip in the S&D balance, and we are now seeing this market trade us in a bearish way longer term. Now, as we know, in bearish structure, we expect to see lower highs and lower lows. So we want to see price come back up to correct itself, to set that lower high before it goes on to set a new lower low. Now, this is great for us because not only does it give us an area at which we can place short positions from, taking full advantage of the new higher time frame bias, but we can also take part in bullish positions, so buy positions, before we actually take part in those shorts. So we can take part in this corrective wave here. What we need to do is we need to go down on the time frames. We need to look closely at current data, and we need to wait for price to trade into an area of interest for us. So this is our take profit target for any buy positions that we're placing. This is also an area we can look to short from. Now, in order to go long, we simply want to see price trade back down to set a fractal higher low before continuing to set those higher highs in the market, trading us all the way up. And then we close those buy positions. We prepare to go short to follow the higher time frame bias, right? Now, the reason why I've pulled my path down to this point here is because underneath all this jargon and underneath all this analysis here, we actually have a order block. So I'd love to see price come down, clear this order block here before trading us in a bullish way. So what I'm going to do is I'm going to set an alert. I'm going to wait for price to trade down, giving us that refined entry for those long positions. We can then look to place a long with our stop loss just below the low that's created. And we can set our take profit just below the area of supply we're looking to see price trade up and into. And as you can see, we have a great risk to reward return of a 1 to 11. So if you're risking 1% of your equity, we're looking to gain back 11%. With this market, I am wanting to see a longer term bias of bearish structure. However, price is within a corrective wave here on the higher time frames. So we can look to take advantage of some buy positions beforehand. But that's my analysis there for Great British Pound to the US dollar. Mark this zone out for yourself if you need to. Also look at this area here on the daily time frames. If you want to see price pull back, I believe this will happen over the course of Monday and Tuesday, and then we can look to take part in those longs Wednesday, Thursday, Friday, and then I would imagine the week that follows will be our day to take part in those short opportunities. Now I'm going to finish off on the XAU USD market, so the gold spot. I've been wanting price to pull back for the longest time so I can actually get in on some buy positions, and I'm thinking we are seeing a breakdown in price now, which has eventually happened. We've been waiting for this, but we are starting to see price distribute. We are starting to see weakness now in demand. Supply is beginning to take over. So I'd love to see a break in these lows here. Continuation in bearish structure, trading us all the way down, clearing this area here at least. That will activate demand in the market, and then we should see the next push to the upside. My analysis for gold is quite simple. This is a bullish market. We are simply waiting for price to trade into an area that we can take advantage of this market from. So yes, we can look to short this market, definitely. However, as we know, this holds risk, and the reason why is because this is such a hawkish market. Gold is constantly appreciating. We don't know when the turnaround is going to be. So our safest bet is to just wait for our next buy opportunity. I'd be quite cautious if you were trying to short this market to capitalize in any short-term corrective waves. So I'll simply be waiting for price to trade us down to the 2766 area, and then that's when I'll be looking for that turnaround to the upside. But that's my analysis for this Sunday sessions video. If you want to see my Euro NZD analysis, which is very good, we've got a trading opportunity there to take advantage of on Monday, then go ahead and join our Learning Lounge group chat. It's completely free. Links are in the description. But with that being said, people, I hope you guys have enjoyed. If you have any questions or queries with regards to anything I've gone through in today's video, then please leave some comments below. And as I said at the start of the video, if you have enjoyed, don't forget to leave this video a thumbs up. All the support you guys provide is very much appreciated. Thank you very much for watching, and I'll catch you all in our next Sunday sessions video.